Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets remain in correction mode on the weekly options expiry day. The Nifty falls towards the 11,300 mark, while the futures are witnessing fresh short positions. Yes Bank's Group President and former CFO Rajat Monga quits, but shares surge after CEO Ravneet Gill assures investors in a conference call today. The Nifty Metals Index is the top sectoral loser in today's trade. All components of the index, barring NMDC, are trading with cuts. And oil marketing companies continue to lead the gains on Nifty. The stocks are surging amidst a buzz of a cabinet meeting this evening, which may clear BPCL's proposed divestment. Good afternoon, Neeraj. Well, the selling pressure continues, but we're definitely off the morning lows.
Yeah, and it's very similar to yesterday, Navneet. Maybe not at the start of the show, but somewhere during Countdown on Tuesday, that is. We started off in a precarious situation, and then we recovered a lot of lost ground. Only to end in the red, despite the fact that you might look at the fact that it is off the lows of the day, but under pressure for sure. So 268 points off for the Nifty Bank, and it's banks yet again. If you can get the GIP3 for the bank or this week's chart for the Nifty Bank, it'll show the kind of intraday moves that we've seen on the Nifty Bank almost every single day. And there's a lot of pressure out there. The banks are essentially the pivot, which is taking the indices down along with it and bringing volatility into the index as well. We'll try and get that at some point of time in the show. Just before we get, okay, this is of course the Nifty Bank in the last 7 days, but look at this, the kind of jagged edges and how it's fallen over the last 3 days. Very quickly, the turnover before I get to the heat map, because the last few days have been days of high volumes on the cash market side. I wonder what's the case today. The options data, of course, would take the F&O volumes higher. Cash, NSE cash at 26,000 crores, so we'll probably nudge that averages of about 35 to 40,000 crores in the session today as well. Very quickly, the heat map and show you what's moving and what's not. In the start, it was a lot of red. Now the green has clawed its way back a little bit, but commodities continue to grind lower, and banks are showing very diverse moves with the likes of Yes Bank doing well, ICICI Bank doing well, but everything from Axis to IndusInd to HDFC to Kotak is all under a bit of pressure. The stock of the day, of course, there are two stocks, Yes Bank and BPCL, because of what arguably would come out later on in the day today.
Yeah, and in Yes Bank actually, Neeraj, and we'd probably get more details on the same, but I believe the excitement is also not just on the fact that the overhang of the promoter holdings is now pretty much gone, but also, in an interview, we hear Ravneet Gill suggesting that fundraising could happen much sooner than the street is expecting, and to the tune of about $1.2 billion. So, we'll try and get more details on that, but that's probably keeping the street a bit more excited on Yes Bank. But coming to the broader market space, it's still some amount of pain that we've witnessed in the mid caps and the small caps, which are both down closer to 0.5% plus in today's session. Starting off first with stocks in focus, Indiabulls Housing, which is up after the kind of losses that we've seen over the last few days. On Tuesday's session, though, it did end the day in the green after slumping 10% in intraday trade. So the stock's up 1.5%. Interglobe Aviation on the back of that arbitration, you've got the stock down 1.5%. And Prestige Estates, with its tie-up with DB Realty to make hotels and convention halls in the Aerocity in Delhi, that's something that's keeping the stock active in today's trade. Aside from that, what else is moving? You've got Adani Green, that's up about 8.5%. Good going for that one after seeing a pummel, for most of the SL Group stocks. Dish TV finally sees some resurgence in today's session. The stock's up about 7.5%. And Godrej Properties continues to do well. The stock is up about 4.5% in today's trade. What's not doing well is Edelweiss Financial. Now that stock's down 13%, and this is actually a recovery from the lows of the day. It was down almost 19% from where it's picked up. Remember, has one of the largest exposure in terms of its property loans that has given out, so its lap book is extremely huge, and I think that's what's keeping the markets a little bit on the hinge with regards to Edelweiss. JK Paper is the other one. The last 2-3 days have seen subdued trade on the stock. There was an expectation of a dividend which didn't come about. The stock had run up ahead of that, and I think that's what's keeping a little bit of a pessimistic view on the stock. And then Lakshmi Vilas Bank continues to look weak. It's down again 5%. Stocks, however, there's not all gloom. There's some interest in some stocks which have now approached their 52-week high. So you've got ICICI Pru, which is near its 52-week high, about 1% higher. And then Dixon Tech, I think its 52-week high is 2,994. So 60 points short of its 52-week high, but it's still doing well in today's session, about 1.5% higher. What else is happening? Today is the futures and options, the options expiry day today. So Navneet is joining in right now to give us details of how the setup looks. Navneet, good afternoon.
Good afternoon, Davina. Thanks for that. Well, it looks like the short positions continue, at least on the futures side, like we saw on Tuesday as well, which was another volatile session, both on Nifty as well as Bank Nifty futures. As of now, we are seeing open interest build up, but I also want to point out the premium on the Nifty futures has come off from those levels of 69.70 to currently 42 levels, and the index currently trades above the mark of 11,300. Pull up Bank Nifty futures as well, where majority of the shorting has been seen in the recent past, and once again today open interest higher by almost 13%, premium just around the same level of about 150 points, and Bank Nifty has been trading, remember, below its 200-day moving average, whereas Nifty for the second straight day has taken support at its 200-day moving average. It took on Tuesday as well around the levels of 11,250, and today as well we did touch that mark, but there was some recovery seen from those lower levels. In terms of options data, then where can the expiry take place? As I mentioned, 200-day moving average can be taken as a big support. So 11,250 on the downside to about 11,350 on the upside is the 100-point range you can watch out today. In fact, the 11,300 strike both on call as well as put side has been active. Combined premium too is somewhere about 40 to 45 points, giving you the same range as I just mentioned. In terms of stock futures, Piramal Enterprises, the one which is one of your top F&O losers also for the day. Remember, the stock was down 20% in the month of September. Today, once again, there is some selling pressure which has come back here, and the stock has been trading below all its key moving averages, telling you at every lower level also there is shorting taking place. And as we speak, the futures of Piramal Enterprises are trading at a discount of 40 rupees. Hindalco from the metals pack has slipped below 50 DMA this week, and the short build-up continues on the future side as open interest build-up seen, and this particular counter for this calendar year has corrected nearly 20% and 9% higher in terms of OI build-up, telling you shorting seen. The stock's down about 4%. Lastly, Yes Bank, of course, we've been talking about this counter. It's reversed Tuesday's losses definitely, but to call it a short covering bounce right now, though to me it looks like a short covering bounce because the stock was sitting with huge amount of short positions. As of now, if you look at the futures, they will tell you there is some open interest build-up of about 13 to 14%, but remember, these can be intraday positions also which can be unwound. So the correct data will come only after market hours when you look at the Bhav copy, but definitely stock reversing its Tuesday's losses.
All right, let's begin with the market voice then. Neelotpal Sahai of HSBC Global AMC is joining us on the show right now. Thanks very much for taking out the time. You know, I'm going to start off first with the key pain point of the market, and that is banks. Be it private sector banks, be it PSU banks. Obviously, you know, from a market standpoint, cooperative banks are not there, but that is also another pain point. What's the sense, considering that it's like 40-45% weightage on the index? They have a big weight on what the Nifty does.
Yeah, thank you for having me on the show. And you have rightly mentioned that financials is just not one sector. So it's not a homogeneous sector, but it's a combination of many sectors. And when you are probably talking about 40-45% weight, then other than the different kinds of banks, we also have got insurance plays and NBFCs. So that's the first thing, that it's not a homogeneous sector. The second thing which is important to understand is that especially the financial sector has been behaving in a bipolar manner. While on the one hand, there are certain banks and certain NBFCs who has done extremely well and they're close to their all-time highs. On the other hand, we have seen massive correction on many other banking stocks and NBFC stocks. And some of the banks have begun to recover over last 1 year. So if you look at last 3 to 4 years, we have seen that overall profitability of the banking sector has come down. So profit pool for the sector has diminished. And we have also seen that a profit pool has migrated into fewer hands, and the one which has gained market share, especially in the select private sector banks whose both lending and the liability profile have been more granular in nature. They are the ones which has gained market share, and that's where the profit pool has migrated, and they are the ones which have benefited immensely. So when we are talking about overall weight in the index having gone up or remained high, it is on account of these large private banks, especially which have got high weight. They have gained market share and their profit continue to show a strong growth over the years. On the other hand, those which have been punished and punished badly, they do not form a big part of the index, and hence they have not had much of an impact on overall index. Going forward also, we do see a similar trend to continue because earlier we have seen some of the private banks were gaining share from the PSU banks, and over last 12 months they have been gaining share from the NBFCs as well, and this trend is likely to continue. There was a phase in FY19 when we saw that the overall NPA in the system beginning to reduce largely on account of NCLT resolution, but looking at the first quarter number this year, we have seen reversal of these improving trends also to some extent. As a result of which, but this is not widespread, this is into certain smaller segment itself. As a result of which, the gains which some of the banks made last year, especially the corporate lending banks, their gains have begun to now come at a slower pace right now. But the ones which were lending to retail, which were into more granular space, they are continuing to gain share. So overall, on a net basis, we will continue to see this bipolar market in the financial space, where the ones which are gaining market share and where the profit pool is migrating, they will be the one which will become bigger and better.
Okay, that's on the financials, but let's talk a little bit more on the overall mood of investing right now. And do you believe that up until now, where the conversations revolved around having SIP investments in the equity markets is something that one should continue to follow even now?
Absolutely. So one of the thing which has happened recently was the corporate tax structure was changed about 2 weeks back from today, and that was completely unexpected, and as a result of which there was a dramatic change in the sentiments. Prior to that, the sentiments were quite low, and then suddenly a big improvement in sentiments was felt, and the markets also reacted on account of that. So what we have seen is that the first order impact of the change on the corporate sector is that has already been factored in the market, and it is now the question of the second order impact of the change in corporate tax structure, which would be played over medium to longer term, and that largely would be played through the supply side, that is in the investment side of the economy rather than the consumption side of the economy. It is quite clear from the government actions that they want to focus on the investment part of the economy so as to create the jobs in the market, so as to create the wage growth prospects in the market. And that's going to take some time, as against giving a stimulus on the consumption side, that probably would have had an immediate impact. So probably we are now going to see a more gradual improvement in the market, but surely on the positive side, and as a result of which an investor which is looking to invest for medium to long term should definitely continue to remain invested and should definitely continue with his existing investment plan.
Okay, so if you're a long-term investor, according to Mr. Sahai, this could still be the right time. But Mr. Sahai, the rally that one saw post the corporate tax rate cut, that fizz now seems to be flattening out. In fact, if one were to look at the broader markets, the mid-cap index is corrected nearly 55 to 6% from September 20th. But I want to take your view on the auto space, which has been in focus, and reason being the monthly sales numbers, which continue to decline. Was there any takeaway this time around, though on month-on-month basis, we did see improvement coming in, especially for the two-wheeler companies?
Yeah, that's the problem with if there are too much data point, and in case of auto, since this is a high frequency data, and this is a very high part of our overall consumption basket, so we do tend to sometime overanalyze the data. But having said that, we should also look at, there is an element of seasonality in the month-on-month data, and we should also look at the fact that probably this year the festival season was a bit early, maybe by week or two. Probably some dates fell in the month of September this year as opposed to October last year, so that could have also played to some extent in the month-on-month data. But I wouldn't like to overanalyze the month-to-month data. If you're going to look at auto sector and whether this sector is investable or not, we have to understand the reason for the slowdown in the auto sector now, which probably is into the 12th or 13th month or so. It has began sometime in third quarter of last year, and it still is continuing, although people have been talking about the slowdown in auto sector only for last 3-4 months, because initially one thought probably it is a short-term phenomenon and it will reverse very quickly. So there are a couple of factors. On one hand, we have seen the cost of ownership of an auto and operating an vehicle has gone up, be it on account of change in the fuel norms, and as a resultant the cost of vehicle will go up, or it could be the change in the insurance buying norm, where now one has to purchase 3 years insurance at a time of purchase rather than 1 year. So from the cash flow perspective, initial cash flow has gone up. At the same time, this period has also coincided with the liquidity crisis in some of the NBFCs which were lending for auto sector. So as a result of which, availability of finance for auto has come down, and cost has not come down commensurately with the overall interest cost coming down in the system. On the other hand, during the same period, we have seen the jobs market as well as the wage growth prospect, they either remaining where they were or probably diminishing into some extent, as a result of which sentiments have remained subdued and dampened. So it's a peculiar situation. On one hand, the cost has gone up. On other hand, the wage growth prospects has remained subdued, and that has, to our understanding, is the reason for the auto slowdown. So for one to make a case for investment in the auto sector, there has to be an improvement on one or both of these counts, and that we are not likely to see in a hurry or so. So we do not see this trend of a YoY decline in auto sector to reverse in a hurry, at least for a quarter or so, a quarter or two. And that we believe that probably an improvement in the jobs market as well as that of the wage growth prospect, that is a necessary condition for a revival in the auto sector as well. And for these reasons, we will continue to remain underweight in the auto sector right now.
Okay, Neelotpal, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. That's the view from Neelotpal Sahai of HSBC Global AMC. The markets and specific pockets. Now, I think if we're talking about the markets today, you can't not talk about Yes Bank. The stock price has risen over 20%, and it's been like that for most part of the trading day today, after the lender's CEO and MD Ravneet Gill clarified that the bank is on track to raise funds and at valuations that aren't at a sharp discount. What also helps the stock price, I reckon, is the fact that the overhang of the large sale goes away. But the fundraising is an interesting announcement, and Subhashri Ghosh of Bloomberg News, who's spoken to Ravneet Gill, joins us right now for more. Subhashri seems to be confident of raising $1.2 billion despite the recent promoter sales that have happened and the fact that the price has come off so much.
Yeah, absolutely. I mean, Ravneet Gill was very confident when we spoke to him. His body language was very confident, assured that he can raise this money, and at one shot is what he's looking to raise. So what he's saying is that this share price depletion has not really hit investors' confidence. He's saying that they are speaking to the same set of investors they were speaking to before this depletion started, and it's like 3 sets of investors that they're talking to: the private equities, the family offices, and the strategic investors, which are basically the technology companies. So he reiterated that, you know, these talks are still very much on the table. All the investors are willing to put in money. They are on the way to do this. However, I mean, to raise this kind of money of $1.2 billion or $1 billion at one go requires some bit of, you know, regulatory approval as well. And he said that he will approach the RBI after, I mean, doing the groundwork, and then they will understand how far they can go on it. But apart from this, I would also like to kind of let you know about what the thought process is in Mr. Gill's mind as of now. Given the share price fall, the bank is actually focused on improving the depositors' confidence. They don't want a run on the bank, really. So they are saying that the biggest concern from the share price fall was to kind of preserve the confidence of the depositors franchise in the bank, and he said that there was not much of a withdrawal despite the panic sharp fall in the prices, and apparently the depositors are pretty much confident about in the bank, and they have seen quite a bit of improvement over the depositors' money in the last 1 quarter. So these were the two takeaways. Apart from that, he also said that for the capital they have a bit of a runway, like the core capital which is now at 8%. He said that will help them to go for a few more quarters going ahead. But obviously he is saying that he's claiming that he can raise this money much before the market expects them to raise. So he sounds very familiar, very confident about this.
Let's wait and watch if that happens, and when does it happen.
Yeah,
also
exactly.
The other point also.
Conversation about when this could.
So he declined to kind of give a very specific time frame. He said that let us not kind of specifically say how much time it will go, but he pretty much sounded confident that he can do it before the market expects. Market expects it in the next 2 quarters or 3 quarters maybe, but he's kind of hinting at that he can do it before that.
Okay, we'll leave it at that, Subhashri. Thanks so much for bringing us that update. So that's Subhashri. They've spoken to Ravneet Gill, and the body language sounded confident. Well, at 10,000 crores, raising about...
It's the same market cap, then they want to raise the same amount of money.
It just sounds a bit too steep, but hey, the presumption would be that the pricing will not be at the current market price.
That's what I think he said. He said it's going to be at not at such discounted value.
So the SEBI formula actually says, this is what Macquarie report had said, you have to take the average price of last 6 months or last 2 weeks, and whichever is higher, you have to consider that. And that particular price will definitely be higher than the current market price. So it becomes actually a very tall task, but still there are certain provisions under which they can still go ahead unless they do preferential allotment or placement to as much as 5 institutions. So if they can meet that.
5 institutions.
That's a tall task to accomplish now.
And even a 6-month average would still be double digits.
That's what I'm saying. It'll be higher than the current market price,
but still probably double digits.
Yes, well, let's wait and watch what happens there. But Yes Bank, amongst the, never mind today's uptick, but otherwise, at least until Tuesday evening, amongst the top contributors to the fall on the Nifty as well, amongst the most volatile Nifty banking stocks too. But in today's session, well, a sign of volatility as well, up about 23% after the similar fall that we saw on the stock in Tuesday's trade. But another stock that has actually been hit badly is DLF. While the real estate space would have done very well, DLF is not quite doing all that well. Now, the company settled intercompany payables worth close to 8,700 crore rupees to DLF Cybercity developers as well. The move will result in an increase in net debt too. But there are some details that we need to spell out, and Sharad Dubey is here with all of those. Sharad.
Yes, good afternoon, Neeraj. So basically this move has actually happened, to make the DLF consolidate its balance sheet, especially its rental assets, So basically what has happened is they have actually settled the intercompany payables that is worth almost 8,700 crores, which was there in January this year. It reduced to June at around 5,541 odd crore rupees. And yesterday, on the exchange notification, the company stated that the interpayables has been actually settled with the DLF Cybercity developers. Now, this is a joint venture between the company and the Government of Singapore's investment fund. Now, if you see the details of transfer of assets, the shareholding in DLF Info Park Developers has an enterprise value of almost 1,000 odd crores, and shareholdings in Nambi Buildwell has 1,012 crores, and also 48.2% stake has been seen, which is almost having a 1,700 enterprise value. So apart from this, we see Axis Capital, giving a buy rating to the stock with a target price of almost 230 rupees with a potential upside seen of almost 46%. So they expect that the full transmission of 110 basis points of interest rate cut over the last 7 months in the economy will further drive the value of the annuity assets. Apart from this, the rentals will also grow at 19% compounded growth over FY 20 to 22, with market rentals being higher almost by 20 to 35% as compared to its actual rents. And lastly, there is also a low supply of Grade A office in Gurgaon, which has led to a sharp uptick in net leasing lending, which provides a stronger visibility for the rental assets. Now, if you see the rental build up, which will happen over the course of the next 3 years, you see from the June rental rate, the rates are going to actually go up, to almost 4,700 odd crore rupees in FY22. However, there are a couple of concerns, and the first one being the petition regarding in the Supreme Court regarding the non-disclosure of material information in the QIP offer document remains, area of concern. So this is what is happening in the DLF space. Back to you.
Thanks for that, Chadha. Sorry, I just want to come in out here once. I mean, amongst the other reasons why this report is interesting is because this brokerage, which is Axis Capital, believes that the annuity income that DLF will provide a significant valuation cushion. According to them, the valuation based on what Embassy REITs gets for its annuity incomes and what DLF is right now getting for its annuity income, and the projected growth in DLF's annuity income till FY22 leaves a bit of a discount on the valuation front for DLF, and therefore DLF looks for them to be a solid buy. Their target price is 237, which provides a 46% upside. But you could argue in one way that there is a difference between other bullish reports and this one, simply because we've seen, by virtue of what's happened to Embassy REITs, that annuity incomes and REIT models are getting a lot of favor, and DLF might be on the way to there. So let's wait and watch if that happens.
All right, that's about DLF, but let's move on and talk about another company which is in focus, and that's India's sole commercial coal miner, which is going through a rough patch with production and shipment hitting new lows last month. A large chunk of it is due to the unusually high level of rainfall in the month of September. We're talking about Coal India here, and Nikki Mirchandani joins us to take us through all the details. Nikki, the target they had set for the year was 660 million ton, and I think so far in this financial year, the offtake's already down 5%. Take us through what's transpired in the September numbers, and are the yearly targets achievable?
Clearly, it's a tall target to ask, but then let's start off with the September numbers first. Production numbers are at a record low level, and if you look at the shipment, that's almost down by 20% year-on-year basis and almost at a 5-year low. September 2014 is when we saw this kind of level. A couple of factors which actually contribute to the dismal set of numbers that we saw in the month of September. One being the heaviest rainfall in 25 years, which flooded the mines and hindered shipments. And also we saw major subsidiaries offtake volume going down. WCL and MCL, Mahanadi Coalfield, recorded an offtake volume decline of almost 40 to 32% respectively year-on-year basis. Also, we saw inventory destocking continuing to happening in the month of September. Apart from that, there's also an accident which took place in one of the largest mine of the company, which is the Deepika mine, 30 million ton, where it belongs to one of the subsidiaries out there, and this happened after an embankment of a nearby river broke into pursuant to persistent rainfall. This is expected to have some bearing on the production numbers of the company at least for a month, and Edelweiss Securities pegs this to an amount of around 2.5 to 3 million ton. Also, what does this mean? As we just talking about, what does this mean for the target? 660 million ton target clearly looks very ambitious and steep right now. The monsoons factors, because of which monsoons have been unusually long, which has impacted the output performance of the company. Also, there had been an accident which took place in Odisha coal mines earlier this month. The company is yet to recover from that as well.
All right, Nikki, thanks very much for that. That is Coal India that's in focus. Remember, both NMDC and Coal India, have been suffering, particularly with regards to their production numbers this time around. Coal India is at 186 right now, NMDC 96. So absolutely flat after that big bang move that we saw on Tuesday's session on the back of some changes and tweaks in the wording by the government in the minerals rules. But moving on, Jubilant Foodworks is in focus today after Phillip Capital downgraded the company to neutral. Agam Vakil joins in for more. Agam, what's concerning Phillip Capital with regards to Jubilant Foodworks?
Well, it is essentially the same-store sales growth, and that's the expected weakness ahead is the reason why Phillip Capital has downgraded the stock to a neutral rating, and the price target, however, has been kept around 1,435 rupees per share, not too far away from current market levels. Well, the firm argues the same-store sales growth trends are expected to become worse before they improve, and this is largely on the back of the channel checks that they have carried out over the past few weeks and months. and they say that demand revival is yet to come through, and there is very little that that they have seen, at least as far as Jubilant FoodWorks is concerned, as well as several of its peers in the industry go as well. And they expect a same-store sales growth similar to that which we've seen in the first quarter, that is around 3 to 4%, 4% on the higher end, despite the fact that they've taken price hikes, and they can only expect to see a gradual uptick in same-store sales growth, eventually with, well, an improvement in the economy in the long term, and that's the reason why they've downgraded the stock.
All right, Agam, thanks very much for that. So that is Jubilant FoodWorks in focus, and Phillip Capital not too gung-ho on the same-store sales numbers for Jubilant. Stocks down closer to 1%. Moving on, Indian markets have become a hope market in the last couple of years. That's the word coming in from Mahesh Nandurkar of CLSA. In a chat with us earlier on today, he also spoke about why investors are being hard on Indian markets. Listen in.
The Indian market has generally, become like a hope market, right, over the last couple of years, and there has always been this expectation of, broader market rebound or the earnings growth rebounding, which hasn't really translated into reality so far. So a lot of investors, want to kind of, see the reality, before jumping in. So my sense is that yes, there is some inclination, and clearly the valuation gap has widened. Between the leaders and the stocks that haven't really participated as much into the rally, also the mid caps versus large caps, and my sense is that trade is going to happen, I would say, over the next 6 to 12 months and probably beyond, but it's not going to start in a hurry, because as I said, now India has become the show me the money market, where people do want to see the hope actually showing, at least to some extent, into the reality.
What about the later stage financials? And sorry, let me rephrase my question. We've talked about banks enough. The ones which have performed really well are some of the non-lending financials. It's a small pack, but insurance has done fabulously well in the last 6 to 9 odd months. We're seeing asset management companies, even though there is only one notable name out there, doing extremely well. What's the house view out there, Mahesh, and what do you personally believe? Can there be more gains in this space, which seems extremely overvalued optically?
So, we as a house, continue to be overweight on the banks and financials. We still have, clearly an overweight stance on the private financials and banks within that, with kind of a well spread out, portfolio for the private banks, the retail banks, versus the corporate banks as well. Talking about the non-lending financials, which is the life insurance, general insurance, asset management, and so on. There is clearly, a view that this is, one sector which doesn't really have any headwinds, like some of the banking or the lending sector still has in the minds of investor, whether, it is to do with NPL or whether it's to do with, the worries on the margins, the NIMs, because, as the leading state-owned banks, start offering, a repo rate linked product, it could pressurize the margins. So these are still the two concerns on the banking side, even on the private banking side. But on the non-lending side, clearly we don't really have any concerns. Yes, the valuations have gone up, but the business fundamentals are strong, and it doesn't really have too much of concern. So this is clearly emerging as one of the sectors where the valuations can look optically, on the expensive side. But I think, if we take a leaf out of what we have seen in the Indian markets over the last several years, there are a few sectors like consumer staples, consumer discretionary, where the valuations did appear quite expensive for a long period of time, and it still does. And my sense is that the non-lending financial as a sector is getting into that phase. So I will not really be too much worried because of the high multiples on that space just as yet, because it's just the beginning. And my sense is that the stocks can continue to deliver returns in line with the earnings growth, which are going to be, in my view, in high double digits.
So just to get this correct, Mahesh, you're saying that here on the re-rating may not happen on the valuation front for maybe the insurance companies, but earnings-led valuations may stay higher, and earnings-led momentum could give the stock returns. Am I correct?
Absolutely, absolutely. So I'm not really worried about the valuations being on a higher side. I think it can continue to remain at those elevated levels for a very long period of time.
Well, that's all things markets. Mahesh Nandurkar with his thoughts. Let's talk about all things market and trade. With the bank nifty being lower by 1%. Firstly, a technical expert, Aditya Agarwala of Securities, with us on the show. Aditya, good having you. Thanks for joining in. What's the call on the Nifty Bank? 275 odd points down, third day on a trot. Is there more downside here, or would you play the contra trade?
I would go in for a contra trade. There's good, strong support from the 50 DMA and 61.8% Fibonacci retracement level, which is around 28,230 to about 28,250. So that is a good, strong support zone. We have seen 2 days wherein Bank Nifty has bounced back from those lows, and I believe it's just a matter of time before we start to trend up again. And on the flip side, if I also take a look at the Friday's move that we had witnessed, the massive 20th of September move that we had witnessed, that was on extremely high volumes. The correction that we are witnessing following that is on extremely shallow volumes. So that tells me that's more of a correction within a larger trend that had emerged on Friday. Once that correction is over, things get settled down from overbought levels. It cools off. Indicators cools off, then we'll resume the upward trend, and we might hit levels of 29,500 and 30,000 again. So I will not take a trade today. Probably tomorrow I would not shy away from taking a trade. Anything with a stop at 28,200. I'm looking for a target of 29,000 first, and then 29,500 in the coming week.
What about stocks? What are you recommending this afternoon?
So I got a couple of buy recommendations. Biocon has, after a long correction, broken out from a trendline resistance and a key moving average resistance, and that is on extremely healthy volumes. So I got a buy target of 240 for Biocon. One can place a stop at 227. The second stock is Escorts. Same, after a long consolidation and a correction, stock has witnessed a massive breakout in the previous trading session, and it's a follow-up move today as well. So a buy recommendation in Escorts for targets of 650. Stop loss can be maintained at 605.
Okay. Stay on with us, Aditya. Lots more to talk to you about. But in the meantime, let's also bring in Devang Mehta of Centrum Wealth Management. She's joining us right now on the show. Devang, good to have you on the show with us. What are you advising clients? Where should they park their money now?
Good afternoon. Thanks, Devina, for having me on the show. Yes, I think what we have seen right now is this correction which has probably came to the fore after seeing a huge rally in the market, which was sort of a rally of disbelief for a lot of participants. It again creates that part of that side of a room which a lot of people were just feeling left out. So I think this gives them an opportunity to come into the markets. Three things very important. Fundamentals are still not in place, of course. It's the rally that happened, the earnings accretive rally, which probably we can term, has already played in the markets. Sentiment right now is still not great, as we are not seeing accidents stop to happen, and every single day there is a scare that the NBFC issue is not going to stop in a hurry. So that is again taking its toll on the other co-participants as well. This is on sentiment, and liquidity still. FIIs, after that major move, there was a feeling in the market that they would probably be a little more proactive in buying, which has not yet played out. So yes, this are critical times. Probably somewhere down the line, we feel that this is a good time to buy in tranches and be very, very selective. We have just been more with the market leaders rather than getting into that 6th, 7th, 8th stock in that same universe. Be among the top 3, 4. That is what the call we are giving to the clients, and buy in tranches.
Hi Devang, and good afternoon. Well, the sentiment which was there on September 20th when the corporate tax rate cut was announced may not be the same today, and as you also highlighted, that incremental earnings growth which would come by as a result of this has already been factored in. So at current levels that we're seeing in markets, there is some selling pressure seen in certain pockets, be it the banking stocks or companies where some corporate governance issue is, or for that matter even the over leveraged companies. How do you place your bets, especially in broader markets which have corrected a lot since September 20th?
Yeah, I think a very good question. So in fact, right now the question is that you need to be in the front line, the top 40, 50 names or the companies which are out of it. So there's a larger pool of another 50, 70 stocks which are not part of Nifty and which probably are ready to come into Nifty at any moment. And there are such sectors and such themes where there is somewhere there is value and somewhere there is even growth. So on the growth side, again, I know it will sound very cliche, but we have been highlighting since last 1 year to be into insurance companies. Initially, the call went a little more, I can say, on the downside when we bought as companies like HDFC Life Insurance, just to give an example, companies like ICICI Lombard, the life insurance as well as general insurance. This theme, which is the non-banking financial institutions or non-lending institutions rather, that played out very well. And we still feel that lack of penetration, lack of density in a country like India, this would be a thriving business. So this is one side of the market where this does not have any representation in Nifty as well. So this is sort of turning out into an interesting theme. Second theme which we have been highlighting is building materials. This has been a very, very strong pocket in terms of even growth, except for the last couple of results. We have seen paint companies, adhesive companies, fast moving electrical goods, all this coming up with a good to decent set of numbers. And again, with a little bit of construction activity coming up on the infra and the housing side, this theme can play out very well. So insurance, of course, financials, top market leaders in this space qualify as buys or at least accumulate on dips.
Devang, what would you do with some of these names like L&T, Siemens, ABB, active pocket for a period of time post the corporate tax cut announcements and the expectation that whatever the savings are will be put back into the system in terms of setting up new manufacturing units? Would you believe that this pocket has significant interest yet?
I think this theme has been the most elusive theme in the last 5 years, where it was extremely fashionable to talk about the capex coming up in the second half of the year, but it has sort of never came up. But now, for a reason that after this corporate tax cut, there is a feeling amongst the community that a lot of this retained earnings or a lot of this earnings growth, where the companies would directly tend to benefit. For some companies which are in capex oriented sectors or companies in capital goods, which are straight away beneficiaries of this move, would have a lot of operating cash flows to put into the business and also expand. And a lot of expansion will also tend to happen once the capacity utilization dries up in a lot of such sectors. So incrementally, we are feeling that the capital goods companies would stand to be beneficiaries. Of course, this will not be 5-10 year stories. This would be more a 2.5 year tactical type of stories, where companies like L&T, Siemens, we have been advising on companies like Honeywell Automation, of course, not directly linked to capital goods, but more of security system upgradation. These companies would tend to benefit as a proxy while you try and expand your capex, while the economy starts growing back and doing capex. This capital goods could be a one sector which one should ideally look at.
Okay. Private capex is something we all are waiting to pick up, but we have seen some bit of traction definitely coming in for these capital goods companies. I just want to pull up Yes Bank. I think it's currently at the high point of the day, 41 is currently where it's trading around that level, 27%. And a couple of your other beaten down Nifty constituents have recovered today. So the likes of Tata Motors, Z Entertainment, all the top three gainers are actually your beaten down stocks even on a YTD basis. Devang, what do you do with these banks? Yes Bank, RBL, and even for that matter IndusInd Bank, where relentless selling pressure has been witnessed in the last week or 10 days, and talks now that their credit cost could go up considering the exposure that they have to certain stressed accounts. What do you do with these banks?
I think it's a very, very difficult call to take at this point when market is just willing to pay premium to only the 2, 3 or the 4 market leaders, and no marks for guessing that that has to be HDFC Bank or a Kotak Bank, which have been sort of rock steady during this type of crisis as well, and they've been growing at the pace which they have been keeping on growing, with asset quality being sort of immaculate. So of course the sentiment right now is not great towards this type of banks, the ones that you named, IndusInd or RBL, with so much of clarification coming from the managements of these companies on different media. I think still the appetite is not much to take a risk into this type of banks. So ideally, this is a time when you should stick to the large caps or stick to the market leaders, but should start nibbling somewhere here. But as I said, the crisis of confidence is so huge that nobody would like to take a punt over here. Of course, with fundamentals clearing up and with sentiment changing a little bit in another 1 or 2 months, hopefully, I think things should start looking up good for some of these companies, which are of course not market leaders, but sort of market followers in their own right. And valuations of a lot of these stocks have also corrected. So at a certain valuation, at a certain price point, this surely would be buys.
What else are you buying, Devang, or rather what else are you recommending to buy, which pockets? We've got a lot of brokerages still being interested in real estate, where, the unorganized market is slowly going to, the smaller developers are slowly going to wade away, and a lot of market share is going to be gained by some of the larger listed companies. So that's what's going to work in their favor. But what else in terms of sectors or stocks that you would advise?
Yeah, so on the real estate side, if I could answer that, we generally have been very bearish on the real estate companies per se. But the proxies for real estate, as I talked about, companies in the paint, adhesives, ceramics, tiles, all this again merit a relook. A lot of these companies have been doing well in terms of even their numbers, in terms of the top line, bottom line, plus margins as well. So we are buyers in the building material space, as I said. Yes, another space which sort of is not much talked about is pharma. But I'm not talking about those normal Indian pharma companies like Sun Pharmas or Lupin. It is clearly the MNC pharma companies which have come to the fore and done very well. So to just cite an example, of course, no recommendation, is companies like Abbott Laboratories, companies like Sanofi, Pfizer, which are sort of having monopolistic or a higher market share in their own type of a lifestyle disease. These are companies we have got in some of our client portfolios, and they have done remarkably well. And I don't see any reason why these companies will not do well. The foreign parent does the R&D, and the Indian parent sort of reaps the benefit of what it has been done, and high ROE, ROC companies, debt-free. I guess good franchises to probably own in your portfolios.
Okay. Devang, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time today. That's the view from Devang Mehta of Centrum. By the way, as we speak, the markets are lower by about 400 points. At least the Bank Nifty is lower by 400 points. The Nifty about 0.61 odd percent, so close to the lows of the day. The Nifty Bank certainly trading in or around the lowest point of the day. However, a small update on the tax front as well. The Central Board of Direct Taxes put out a clarification on Wednesday, stating that corporates choosing to opt for lower tax rates won't be allowed to avail MAT credit. This clarification will impact companies which operate in special units. Joining us now to talk about whether it could lead to companies rethinking on opting for lower tax rates is the National Leader of International Tax and Transaction Services, Pranav Seta of EY India. Pranav, good having you. Thanks much for joining in Neeraj here. You reckon that this could be a huge cost to companies who might consider continuing in the old regime for the time being, and would there be specific sect of companies which might choose to do that?
Yeah, so I think there will be a whole host of companies to whom now it might make more sense to defer the exercise of the option to go to the 22% concessional tax rate regime, at least by a couple of years, and in the meantime use up the entire MAT credit accumulated that is available with them. Given that the MAT rate itself has dropped by about 4% for such companies who do not exercise the option of the 22% tax rate, it might mean a little quicker utilization of the accumulated MAT credit, but still that might mean that they would have to probably defer the 22% option being exercised by a few years.
Is this be a very small subset within the larger universe, Pranav, or is it difficult to comprehend that right now?
It's tough to say, but I think there will be quite a few companies, especially companies maybe in the tech space, etc., which might now choose to defer. Even some of the largest Indian corporates might be in the MAT accumulated credit zone. And given that the MAT rate after the recent ordinance can be about 17.5%, including surcharge and cess, 15% is the MAT rate. Including surcharge and cess, I think it adds up to 17.47%. they might still choose to pay that 17.47% but use the full credit rather than go to the 22% without any exemption incentive and pay up that 22 without being able to avail of the MAT credits. So I think that's the arithmetic that will work, but by and large, I think there will be quite a few companies who, at least the large corporates, who probably will opt for this deferral, so to say, of the exercise of the option.
And I guess which is why this whole piece of this corporate tax cut of X% leading to an X% jump in the earnings per share of companies by and large for the Nifty 50 or otherwise may not be as simple as that. Pranav, just one follow-up from mine beyond this topic as well, if you can, because you look at markets so closely and market-related transactions so closely. Everybody thought that with the FPI taxation moving out of the window, there would be a beeline that foreigners could make for coming in. Your clients, etc., when this move happened, because we didn't get a chance to talk then, have they spoken very optimistically and positively about the reversal of the FPI charge that the government took, or is it still wait and watch?
Sure. So, before I move on to that, technically, this is an administrative circular, the earlier question that you asked. So one could say that if the language of the law or the ordinances of a particular type, the circular is not binding on taxpayers and so on. But my guess is if this is the view of the government, then before the ordinance is passed by the parliament, they will bring this clarification in the law itself as well. So that's the other piece. Coming to your FPI question, yes, FPIs were pretty happy with the clarification or the ordinance that surcharge will not apply to them. But right now, given the way the domestic growth story is and the global headwinds, I think it's a little wait and watch. So it's from a tax standpoint, certainly there is a lot of optimism. There is also the feel that the government is listening. There is also the acceptance that the government is willing to do things to boost growth and willing to take pragmatic steps even at cost to the fiscal. So I think all of that has gone down pretty positively, but the rest of the headwinds still mean that there is a certain amount of hesitancy in terms of investment.
Okay, as informed a view as it can come. Pranav Seta, thank you so much for taking the time out and speaking to us.
Thanks.
Appreciate your time. By the way, just before we move on to the next conversation, must mark the fact that the Bank Nifty is now 338 odd points lower and we are trading nearly in or around the low point of the day. So it's turning out to be yet another session wherein the markets may recover a little bit, if at all, but the larger trend is downwards.
In fact, while we're on the topic of the markets, I want to draw your attention to one IPO that closes in today's session. Is the third day of the IRCTC IPO, for subscription, and you've got decent enough numbers that have already come in. So QRB portion, which has been oversubscribed about 44.1 times. You've got NIIs, which have already subscribed 78.3 times. Retail participation has also been good. So retail section has been oversubscribed 11.63 times, and employees have subscribed about 4.67 times. So total subscription of 37.6 times is what you've got for IRCTC IPO. Remember, this is one of the largest IPOs from the Indian Railways. Stable price band of about 315 to 320, looking to raise closer to 638 odd crores via this particular IPO. We'll talk to our next fundamental expert about this in when we get them to join us. But moving aside. Over the last few days, and Aditya, your comment on this, obviously, while we've not seen, we don't have too much data point in terms of technicals, but the fact that an IndiaMart India Mesh has doubled since the time it listed. While the data points are not there, but just purely looking at the way the pricing activity has been, does it look encouraging?
So the space definitely has been buzzing and looks attractive. But I would again stick to DMart, which has been doing exceptionally well, and despite all the hue and cry regarding its valuations and all that, look at the technical charts and look at the volumes. Stock goes into consolidation and then a sharp spurt. The stock is trading at 1950. The trend is biased towards the bulls, and I would continue to hold on to the stock. If somebody is looking on to buy DMart, I believe again these are good levels to get into again. I believe stock will test levels of 2050 to about 2100 in the coming weeks. It's a strong chart. Look at the volumes. The moment stock sees a green candle, the volumes are extremely healthy. It's going through a consolidation. It's a matter of time before it breaks out of that 1950 mark and then hits levels of 2100.
1883. Well, when I was on a holiday, I missed a lot of things, I must say, including the kind of upsurge that we've seen in stocks like Avenue Supermarts. That's just quite stunning. And as we said, I mean, people can keep on crying about valuations.
I think probably the most exciting 2 weeks this year were the 2 weeks you chose to stay out of the market.
The platform is in stable hands, so it doesn't really matter. But nevertheless, let's move on to our more corporate conversations. The slowdown in the economy has hit the infrastructure space hard, leaving infra financing companies staring at low growth. Sajit Mangat caught up with Hemant Kanoria, chairman of SREI Group, on the sidelines of the India Economic Forum in New Delhi, and began by asking him about his outlook on the infra financing space and the challenges ahead for the sector.
The infrastructure is going through quite tough times because there has been a lot of issues which has arisen in the infrastructure sector, because many of the cases the government bodies, state governments, if there were power plant, the PPAs have been cancelled, FSA has been cancelled. If it was road toll projects, it was going on all right, but there are a lot of awards which have been given through the arbitrations. There are disputes which are not getting resolved. Because of that, what happens is that the payments do not come to the construction companies, to the concessionaires on time. They are not in a position to pay back to the bankers on time. If they don't pay to the bankers on time, it creates a vicious cycle, because the bankers will put them under as an NPL, then they will not be in a position to borrow further. So therefore, the whole account gets into a mess, and that is exactly what has happened. So I think that it is very important to reverse that cycle, and as the finance minister has already announced a couple of weeks back that she is planning to see that how the government payments which are stuck up are released by the various governments. So I think that one is the government payments which are stuck up. Second is because about a couple of years back the government had also proposed an infrastructure dispute resolution tribunal to be set up, and I think that has to be also expedited, because if an infrastructure dispute resolution tribunal is in place, then all the infrastructure players, whether it be contractors, concessionaires, the problems which they keep on facing, because they are going from one court to the other and for years together, and the project gets stuck up, and if the project gets stuck up, then it has a huge interest burden and pre-operative costs. So if you look at it, most of the infra projects which are getting completed now in India, almost about 15 to 25%, even going up to 35% is the cost of interest. So therefore, no project can become viable.
How's your cost of borrowing looking then in that sense?
So borrowing basically for us also, because we are relying more on, after the episode of ILFS and many other NBFCs, we are also relying more on the financing from banks and through NCDs, etc. Definitely the cost has gone up by about 100-150 basis points for all of us. Fortunately for us, because we do not have an asset liability maturity mismatch, we are fully liquid. Whatever is required to service our debt, plus over and above that, whatever business we are doing business also on a monthly basis. So we are in a position to raise the resources. And for us, if our cost goes up, we have a pass-through mechanism to the borrower for us. So therefore, for the borrower, the cost goes up in the infra space.
Because last 2-3 quarters, we've seen your asset under management coming down, right? At least last Q4, Q3, Q4, and then Q1 of this financial year. And that is a concern which is coming in, because that's also because of you're very close to the regulatory cap of 15%. Have you been able to address that with capital coming in?
Yeah, so we have been able to address the capital infusion. We have also been able to, as you very rightly mentioned, that the business, also the disbursements, what we were doing last year has reduced because of two reasons. One, the sales of construction mining equipments, which we have been financing, has also fallen down. The last 1 year, there has been a degrowth of almost about 30%. In the sale of construction and mining equipment.
Is it?
Yeah.
And you're not seeing construction and mining equipment picking up in last one?
No. Last 1 year, there has been a degrowth of almost about 30%. So therefore, the market has fallen down. So definitely, our disbursements also slow down in sync with the market. Because if the demand is not there, And because if you look at it, elections came in. So before the elections, there was the election code. After the elections, the government is just setting up the budgets and all. So still, the pickup in the infra sector where the investments by the government has to happen has not started. Then again, we'll see a pickup in our disbursements. And as we had already mentioned about 5 years back, that our infrastructure portfolio, infrastructure financing portfolio, we were successively every year reducing it. So that is in sync again with our strategy. So therefore the book size, if you have seen that there has been a lower book size compared to what it was last year, it is only because the new disbursements has not taken place. It is not the old disbursements.
So are you diversifying to other sectors if you're reducing infra?
So we are in infra, we are in basically financing healthcare, IT. So there has been a slowdown in almost everything. So therefore the pickup of equipments, and we are an equipment financing company. So as an equipment financing company, the sales happen, then only we have a financing business. So what we have done is that we have looked at reducing our cost, we have improved the collection efficiencies. So by doing all these, we will improve our profitability. So by March 2020, we are hopeful that we will be in good profits as we were last year. So I don't see that there will be a dent in the profit because, but
what about credit profile of your top 20 borrowers? Because that's a concern which many of the analysts have.
So basically, you see, 20 borrowers are not very pertinent to us because we have close to about 100,000 customers. So
but they account for a chunk of your...
Yeah, but what happens that in our case, if there is a large customer also, our equipments are small. So therefore, let us suppose a customer has 100,000, we have given him 100 crore of rupees. On 100 crore of rupees, there will be about close to 100 equipments. So actually, it is not bulky financing. It is small financing because if anything goes wrong with the company, we are in a position to repossess the equipments, resell the equipments, and that is a skill set which the company has set up in the last 30 years. So therefore, for us, a large customer is only large if we have given one equipment of 200, 300 crore, and that we have none.
So top 20 accounts for what percentage of your total?
So the top 20 will be hardly about 15%.
15%. And are you seeing improvement in those 20, or is it status quo?
No, there is gradual improvement, and also because of the fact that people were holding on to the equipments, they were not reselling it. So because if the new contracts don't come, then we have to basically influence and persuade the customers to sell those equipment so the realization takes place. And when the sale of the equipment takes place, it is not that those equipments are that we earn a loss because we would have realized some money, would have got a security deposit. So basically the loss that we take on the final sale of the equipment is not large.
Well, that's of course Infra. But the last half an hour of trade left, important half an hour, considering the fact that it's been very volatile the last couple of days. Before we get back to our experts, let's get in Sharad Dubey, who joins us with his list of the Fab 4 stocks of the day. Good afternoon, Sharad.
Good afternoon, Neeraj. The first stock is Apollo Pipes. The stock went up as high as 3%, and I think it is up almost 1% of its highest in a week. This is based on the news that it has come out with the second quarter update in which the sales volume has risen by 11% to 10,306 million tons per annum. So this has been aided, the contribution has been coming from the PVC section and also the value-added segment from its fittings category. Up next, we are having Religare Enterprises, which is up 5% after it has entered into a consent agreement with Axis Bank, where it will pay 170 crores to the bank in phased manner. And this settlement has actually happened amicably between both the parties. Up next, we are having GMR Infra, which is up 3.4% after the Competition Commission of India has given its approval for the acquisition of shares of GMR Airports by the entities of Tata Group, GIC and SSG Capital. This is subject to compliance of certain conditions. And the last stock of the day, we are having CG Power and Industrial Solutions, which is up almost 4.8% after SAT has rejected the appeals of ex-chairman Gautam Thapar, Avanta Holdings and former officials of the company against an order by SEBI that had barred them from accessing the capital market. So these four stocks were buzzing in the space today. Back to you.
All right, Chadha, thanks very much for that. So that is the Fab 4 stocks of the day. Let's bring in Rahul Mohinder of Viratech Software. He's joining us on the show. Along with him, Gurmeet Chadha of Complete Circle Consultants is also there with us. And before I actually go to Rahul on his call on the index, I want his call on Yes Bank, which is now up 30%. So the stock doesn't seem to be losing any steam towards the end as well. And that last pop that you saw, 32% actually, 33 now. So the last pop that you're seeing over the last, I think 10 minutes of trade, 10 to 15 minutes of trade, that's come about. Remember, we just had Bloomberg News and the kind of conversation that they've had with Ravneet Gill, saying that fundraising could happen sooner than expected, and that's probably keeping the market really excited. But Rahul, quickly on Yes Bank, and then we move on to your index calls.
I think, first of all, good afternoon. I think, first of all, on Yes Bank, 50 odd levels, around 49 to 50, that's really the next resistance. If you are looking about trend quality and the structure of the chart, it's clearly negative. I think it's going to take time to move up. We don't expect a V-shaped reversal overnight. So we really want to see some consolidation happen. But I think what's noteworthy is the volume that we saw. Despite the drop that came in yesterday's trade, there were landmark volumes on the stock. So we actually had really good turnover, really big volumes. I think the real test is if we can see this stock really getting to 49, staying above that level, which will add some more weight and evidence to even attempting a short-term buy. So I'm not too excited. As a percentile, it will look very big at this point. I mean, it sounds like a 20% move to 49, yes. But the kind of risks you're also going to take, there'll be no surprise if it suddenly opens 10% lower or 15% lower as well. So again, I'm going to stay away from Yes Bank. Give it a hard relook past 49, 50 levels and see if it can sustain that. Now, coming to the index, let's talk about the Nifty and the Bank Nifty both. I clearly see that both the indices continue to be rather in neutral mode, and that's clearly because of the fact the Bank Nifty is very close to that 28,900 support. The Nifty 11,100 to 200 is a very strong belt of support. When you go back historically over the last 1 or 2 years as well, you see there's a lot of rotation from this level. So I think we haven't really broken down those 20th September breakouts. Those points are still holding good for several stocks and the indices. So I'm not going to rush to any conclusion that we're again going to go down. Largely, I see the market to be a little range bound. 11,550 on the upper end, 11,100 on the lower end. Likewise for the Bank Nifty, closer to 30,000 is where I see the resistance, and 28,900 is the support. It's a stock specific market. One needs to look at buying at the lower end of the range in fact.
All right, Rahul, point well taken. Let's also not forget it is just reversed Tuesday's losses. It still remains a beaten down counter. Let's not forget there were a lot of shorts sitting in this particular counter, and just one overhang is out of the window. No more pledged shares will come to the market which can be invoked by the lender, and that's the reason probably why you are seeing that sort of recovery. And of course some positive commentary coming from the management also indicating they are looking at fundraising right now. But Rahul, you stated it's a stock specific market. Which are the stocks this afternoon that you're betting on?
So a couple of ideas that come to mind. One is IOC. If you look at IOC, the stock's actually been short-term outperforming the index. And I think what's really interesting is, again, the volume build up, not just over the last 2-3 days, but historically back even in July, etc. We saw big volumes around this 143, 145 level. We've broken out of those levels, so still looks good. The fact that we're above the 200-day average on IOC again looks good. If you're a short-term trader, 158 is the target with a 148 stop loss. If you can follow through with it, we're looking at even 170 to 175 as potential targets. ITC again, very good short-term and medium-term picture here. Short-term traders could trade in for a 265 target, and I'm going to be suggesting a buy with a 255 stop loss. The stock's got again very good volumes that kicked in, on that 20th September, etc., even around 23rd. So good volumes that have kicked in. The fact that we're breaking out from supports is what's prompting me. Finally, Maruti, if you look at the 6,600 support level, that seems to be holding solid. And one should use a decline like we've seen over the last day or two as an opportunity to get in. So with a 6,600 stop loss, I'd look at a minimum target of about 7,050 for starters. Again, this is not an intraday call. These calls will take at least 2 or 3 days to mature.
Okay, those are some stock-specific bets coming in from Rahul, and he said it's the time horizon for these bets are almost about 2 to 3 trading sessions. Let's move on and bring our next guest on board. Gurmeet Chadha of Complete Circle Consultants joins us now. Hi, Gurmeet. Good afternoon. I know the stock is over-discussed, over-analyzed, but I'm still tempted to take your view on Yes Bank, and we've chatted about this in the past, Gurmeet. Even when the price to book fell below the level of 1, you said stay away. Even after the fundraising which took place at 83 mark, you said stay away from the stock because not everything seems to be priced in. Gurmeet, now at 40, when all the pledge shares have been invoked, so that overhang is out of the window, is the worst pricing on Yes within the stock price now, or would you still stay away?
So, Navneet, I agree the price point is tempting, and I think a lot of seems to get priced in, and I think today's management commentary was constructive. What I'm witnessing, and I'm doing my ground level checks, is the consistent deterioration in their CASA and deposits, because there is panic at the ground level. There were some net banking issues as well. I've been checking with various clients, people working, my ex-colleagues. There's a lot of pressure on the liability side. And while they are degrowing, the asset book consciously, I think that will remain a near-term hang. So my advice to investors is let a credible promoter come in, let some capital infusion happen, and even if that means entering at a later stage, if the if the price goes back by another 10-20 bucks, it's okay. Then you still have a long rope, because end of the day, if a good guy comes in, we know the upside on on a medium to long term basis could be significant. And if you really want to be there, if you see every new NPA which comes up, they are invariably part of it. It's been Cox and King, CCD. I can just take the name and the list goes on and on. Also, there is a lot of concern on while that's not been discussed in the media, on a lot of shell companies which got created, a lot of layering of transactions which have happened. So my sense is there is maybe something more which is yet to come out. So retail investors are best advised right now to just wait for fundraising and let a credible name come in. It could be any bank, it could be a PE firm. I think, and that's when probably it would deserve a look. And if you want to be tactical, if you are in this market, there are good opportunities in terms of the various divestments which government is going to do. The borrowing calendar for the second half is out. That clearly tells you that they'll have to double up or maybe do more, strategic divestment. So players like BPCL, Concor, and some of the others where the government will go below 51% are far better bets, from a risk reward perspective.
Gurmeet, good afternoon. There is some traction in Biocon. The reason it pops up because we don't see too many other pharma stocks do that. Now today there was some announcement about insulin with Mylan. They're on record saying that they will do an announcement about Herceptin in the first 10 days of October. So that will probably come up tomorrow or next week too. Is there merit in trying to own this stock, or no, leave it alone?
Neeraj, I think it's in our. This is, as I said, I've been saying, wherever there are regulatory interventions, US FDA checks, too many things moving around. This is not a market to. In a normal market, maybe I would have been tempted to, because they have a good business model. Biosimilars are taking over. They are doing some fantastic work even in oncology. But this is not the time right now to really, do a hope trade. If I were to. Put that thing. If you want to do pharma, look at the MNC pharma names like an Abbott, Merck, and Abbott, for example, their top 4 or 5, branded generics make up 45% of the volume. There's been a steady growth there. Valuations by MNCs will always be stressed because governance is always high, and the market is polarized on governance. That's a better bet there. I like Divis. We have discussed Divis Labs. Lesser chances of FDA issues coming. Good model, good combination of CRAMS and generics. So those are the better place to get in right now.
Okay. Amongst the other stocks that are doing well though, today there is a possibility that we might hear something on the divestment about 3 or 4 companies. But the one space that is really active is the oil marketing companies. Now BPCL is up about 5.5%, but HPCL is following suit at 323. That's about 4.7% too. I reckon IOC too could be doing well. So these stocks are certainly doing very, very well for themselves. And the question, of course, fundamentally that if indeed the announcement does come out, can there be more upsides for BPCL? Fundamentally is one question. But do the charts Aditya, suggests that any of the three oil marketing companies could be a good trading bet.
At current levels, for me, BPCL is an avoid because it's jumped from 360 to 530. My risk to reward is definitely not in favor of going long as far as BPCL is concerned. My target will be 550, which is just like 20 bucks up from current levels, and my downside support is at 460. So for those reasons, I'll not trade a BPCL. On the flip side, I like IOC and Hindustan Petroleum. Definitely, they look attractive on charts. IOC will be the top pick. I would give a buy call on IOC for targets of 165. We'll place a stop somewhere around 145 to 140. Those are good support levels. Hindustan Petroleum can also be looked at. That stock is also moved up significantly from 250. So the cushion there is also a little less, but still off. There is some more upside to it. 340 can be seen on the charts. Downside support at 300, but preference will be IOC.
Interestingly, we're talking about whether or not this bit of privatization has already been factored into the price move of BPCL. And if you were to compare, the 12-month forward price to earnings factor for BPCL versus some of the other global refiners, BPCL comes only second to an oil refiner called Fuji Oil in Japan, which has a price to earnings multiple of 17.4 times. BPCL at around 12.5 times is still more expensive compared to, I think the list consists of at least 12 to 13 refiners across the globe, and BPCL comes in second with regards to its price to earnings multiple being slightly more expensive. Though on IOC and on HPCL, multiples are closer to about 8.1 times, which is fine, which is probably in line with a few more other peers globally. But BPCL definitely doesn't seem to be all that cheap with regards to its valuation compared to some of the other global refiners as well. Gurmeet, a quick take here.
So I have a bit of contrarian view here. And I like BPCL. I think what we are missing the point is the rub-off it will have on all PSUs. I think, if you recollect, the last credible divestment was Hindustan Zinc. Look at what Hindustan Zinc has become post that, in terms of valuation, in terms of turnover, in terms of how the company is to be run. There are numerous examples, UTI becoming Axis Bank and others. My view is if you and since we are discussing BPCL, I think Q1 was quite an aberration. The GRM came down to almost $2.8 because of lower cracks. I think that will rebound. Also, I think they have a great retail distribution network. If you see the per pump sales, which BPCL does, that's almost 187 kiloliters a month versus the competition being at about 155, 160. So it has a great distribution reach. Also, the capacity in if I'm not wrong, in Vizag of 0.5 million on propylene will add maybe 50-60 bits to the margin, and the fact that that's still about 9 times, 10 times earnings, I think it gives me comfort. Also, when the fuel prices are low or stable, your working capital issues, government intervening, putting additional subsidy burdens, those concerns get, to a large extent gets addressed. Only in a rising fuel prices, while there is other correlation with GR and marketing margins, you don't expect government to intervene. And, you are in an environment where fiscally things are stretched. So my view is I'm actually positive on both, and I'm actually very confident that this will go through. And if it's a good name, as I discussed last time, the rumor in the market is some 700, 750 rupees per share is where probably somebody has shown interest. But it's clear street rumor, no concrete information yet.
All right, that's still a significant upside from the current levels of about 530 on a BPCL. It leaves you to wonder what that does for IOC as well. But it's time now to take a look at what dealing rooms are recommending this afternoon. Yatin Mota, he's here with his channel checks. Yatin, good afternoon.
Good afternoon, Devina. The first stock talk about is Titan, and clearly this is one stock which has seen a good amount of traction in trade today in terms of volumes. Dealers on the basis of F&O trends are recommending a buy today, sell tomorrow kind of a strategy. Another stock which dealers believe on the basis of technical trends is Eicher Motors. Remember, their monthly numbers were decent versus the street expectations. Of course, there was a decline, but not as bad as what the street was anticipating. Stock is up at the highest point in the day, 2.5% up for that one. Dealers, obviously, as I was mentioning earlier, are buying on the basis of technical trends. And finally, one stock wherein dealers expect some bit of negative flow is Bata. Stock is weak, almost 3% down for that one on volumes of over 5 lakh shares. Dealers are indicating that FIs are aggressive sellers in the counter today.
All right, Yatin, thanks a lot for bringing that dealing room check for us. Just want to highlight and take technical view on a couple of these stocks which have been falling, and one of them is Piramal Enterprises. We discussed this at the start of the show. In the month of September, the stock was down about 20%, and now it's seen cuts of about nearly 5 to 6%. Rahul, come in on Piramal Enterprises, considering the fall that we've seen in the last 15 days to 20 days at current levels. Is it poised for more downside?
Well, again, if you're looking at the short term, I still think, there is a bit of trouble brewing there. We're looking at strong resistance closer to around the 1700 mark. So I really wouldn't like to look at any kind of a breakout as yet on the upside. I won't be really tempted to buy again at these points. My own hunch is we'll probably be heading to as low as 1400 to 1420, which is identified as its next key support. So even the weekly charts are negative. So whether you look at the key averages on the weekly even, that's a bit negative. So I'd wait for lower levels before I attempt even trying to bottom pick.
Okay, last 6 months the stock's down about nearly 40%. Remember, last week or so there was some reports indicating SoftBank, which was looking to invest about $1 billion into the company. Those plans have been shelved now, but no concrete information or confirmation rather coming in from both the groups. All right, just 10 minutes to go for markets to shut shop. So let's get you some closing strategies from our technical experts. Aditya, any BTST or any STBT for Friday's trade?
So I'll stick to Biocon. Stock is trading at the high point of the day. It's a strong move that the counter is showing. So a continuation buy in Biocon. If somebody's already bought into it, one can hold carry it for tomorrow's trade. If somebody's not bought, can enter fresh at current levels of 233. I believe stock is gradually headed high to levels of 240, 244. The next stock on my list is Aditya Birla. Fashion retail stock is breaking out of a consolidation, and that's a good healthy sign that I'm witnessing on the charts. So stock can test levels of 220 to about 230. This is more of a positional trade, not a BDST. One can place a stop somewhere around 205 to about 200 on the downside.
Okay, Rahul, what about you? Your closing bet would be?
So one is Eicher Motors. Again, stock is looking like it's going to head to about 18,800 odd levels. So I'd look at buying in with a 17,900 stop loss. Looks a reasonable pick. It could go even beyond those levels if you're ready to hold on and follow through with it. Another stock which is quietly been holding fort and closing very strong is Titan. If you look at the close today, we are finally kind of breaking out that range. The last few days, we haven't been able to conquer 1300. We're very close to that now, and I think we've definitely not closed at 1290 or higher in the last few trading sessions. So I'm looking at a positive there. So Titan with a stop loss below 1265 for a target of 1375.
Mid-cap technology names which are doing okay for today. Intellect Design Arena is up about 5.9%. L&T Technology Services is about 5.9% too. So we're seeing some strength in these 2 or 3 names. Info Edge, by the way, on fundamental news, of course, is up about 4% as well. So there's these 2 or 3 names which seem to be doing okay for themselves in the session. Any of these on the charts, Rahul?
Nothing that really particularly draws my attention, in terms of fresh buy opportunities. But again, Info Edge could be one which gives you another, 10 odd % if you're looking at short-term moves. So that would be the only one I would really look at.
Rahul, is that a stock you're tracking, or even Dish TV for that matter?
No, unfortunately, these are not on my radar.
Okay. Gurmeet, I want to come to you, particularly with regards to Z. Now they've got an extension going for themselves, probably March 2020. That's the time period that they've got until to make sure that they repay back all the mutual funds. But is there that overhang and that risk of, a sudden, invocation of pledge shares and therefore entering the stock right now would not be such a great idea?
I think so. And as I said, it's been more a technical correction, and my discussion with fund houses, people who have agreed to the extension, I think there is a lot of bundle of nerves because there is a lot of redemption pressure continuing in the credit risk category, which is, despite the 50% payoff, is increasing the concentration of the paper. In some of the funds, the concentration, despite 50% payoff, is still in double digit. So we have to be on a wait and watch mode and see that and hope for a quicker resolution. One relief which could come is that one of the other companies he has, which is Adilink, which is the road projects, it's in public domain that one of the fund has, the price is locked. So if that can flow in early and some debt could be retired using that in some of the funds, that could be a bit of a relief. But it's good to wait. While I think the asset is good, but since it's a technical correction, and the price swings are quite wild, best to be on a wait and watch mode right now.
This just one small question, Gurmeet. Any of the recent IPOs that you would still be comfortable buying, the newly listed ones, most of them are trading very well. Would you make a fresh investment in any?
Neeraj, from a the IRCTC looks good from I'm talking from a new one which is coming, although 7-8 times already subscribed, looks good from a the overall sentiment I think will turn around the entire PSU pack, and IRCT seems to be a good business model. We had discussed in India Mart. I think that's another one where I still think they are doing well vis-a-vis some of the other competitors, including a Just Dial and some of the other Yellow Pages setups. Those are the one or two ones we can look at. Also, I think in this market, Neeraj, while Avenue Supermart is not a recent IPO, my view is that, and we have discussed this, that I think the quality will keep getting more and more flows. It's becoming too polarized, and if you see whether it is Avenue or Bajaj Finance or the HDFC Bank or wherever the governance is not at risk, we are seeing disproportionate allocation coming there. So I would incrementally put money to something like an Avenue Supermart, would have personally applied for IRCTC as well. And maybe Indigo, maybe after with some lag, I see a lot of value with crude prices being stable and the way concentration is going up in the industry at these prices, Indigo also looks good to me.
Okay, Gurmeet, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the markets. And I will just take that point of Indigo forward, a stock which was in focus. Very quickly, Aditya, on the charts, is there any strategy here?
So I would wait for some low corrections to get into the stock. Stock is down 2.5%. There's some sort of a weakness that is getting into the stock. Somewhere around 1700, I'll be more comfortable getting into the stock, taking a long trade, not at current levels.
Okay, Jaman, Rahul as well as Aditya, just stay on. We'll take in closing thoughts from you post-market closing as well. But here's how the markets are shutting shop today. I must say the small difference between today and the last 2 days is that the last 1 hour has been relatively less volatile than what we've experienced in the previous 2 sessions. Having said that, 300 points down for the Nifty Bank yet again. Nifty and the Sensex, the Nifty a lot more well behaved than what Nifty Bank is. The broader end of the spectrum, which has gone through pain all of the last 2 sessions, in today's session, relatively unscathed. Actually, it's very, very flat. You would take this behavior from the mid cap and the small cap index almost any given day. And this is not a bad close at all. The market breadth may be marginally in favor of the declines, but I reckon there will be enough and more gainers in the session today. Actually, we marked a lot of mid-cap gainers. I'm not sure Navneet will do more as well. But let me talk about the large caps. Yes Bank, quite literally at top of the pile, 34% and doing very well. Z, 7.5%. BPCL is a strong 7.5% uptick. I wish we should talk about this a bit. Tata Motors, iShares, IOC, ITC, Power Grid, well, a lot of gains, but the 2 stocks that stand out for me are Yes Bank because of news and BPCL because of anticipated news. 7% higher for BPCL. What's not done well? Global commodity linked names. So Hindalco, Tata Steel, Coal India, all of them down. Today, the high quality names, HDFC Bank, Kotak Mahindra Bank, even the corporate facing banks like Axis, IndusInd, etc. have corrected, and Ultratech from the cement pack continues to grind lower, down on the 1.5%. But well, if OMC stole the show on the index, they probably stole the show outside that too. But beyond that, a lot of names now need flying around today.
That's right, Neeraj. In fact, a lot of them were also beaten down stocks which recovered, bounced back rather in today's session, which we saw for a couple of Nifty constituents as well. So let me start off with the gainers. Biocon Davon, we discussed in the last half an hour of trade. That stock's closing with gains of about closer to 4 or 4.5%, almost at the high point of the day around the levels of 232. We discussed OMCs, HPCL being one of them, that also saw fresh long positions in today's session, closing with gains of 4%. RBL Bank, a counter which was beaten down in the last two sessions. I think today it snapped the 3-day fall, still remains beaten down. Some bit of short covering bounce seen like Yes Bank in this counter as well today, up 4%. Orissa Mine, a stock from the broader markets, I think that was locked in upper circuit, yes, towards the end, 20% gains coming in there. ITDC was the other one where some bit of buying momentum was seen. The stock too was locked in upper circuit with gains of 10%. And Electra, remember this is a stock, we also spoke to the management few days back. They make EV buses, and there's been a lot of trust which has come in from Nitin Gadkari with regard to electric buses as well by 2022. So 8% gains coming in for this counter. On the losing side, Pidumil Enterprises continues to see relentless selling pressure after falling 20% in the month of September, down another 7%. It was down on Tuesday as well. Pidilite corrected a bit, maybe some bit of profit booking seen for this stock. Godrej Consumer from the FMCG pack did not do well. In fact, this one continues to be a laggard on year-to-date basis as well, 3% lower. Motherson Sumi from the Auto Ang space was down about 4 to 4.5%. Couple of other stocks like United Spirits and Edelweiss fell sharply in today's trade. And also, as a pack, paper companies were under pressure, and one of them being JK Paper, which fell about closer to 9% in today's session.
Interestingly, JK Paper, I think the anticipation was that there could be some bit of dividend announcement from the management, but that didn't come through. So probably, and the stock had already run up in the past, so probably some profit taking on that one. We got about 26 seconds left to go for market closing. So this is what you've got on the index as of now, 11,300. Not all that bad considering what the start was. So we are not at the lowest point of the day in terms of the losses, but still ending in the red. And Bank Nifty 1% lower. So if you add up all the losses over the last 2 to 3 trading sessions, I think the banks would have lost closer to 5%. 28,422 on the Nifty Bank. And then you've got your closing. That's your final snapshot at today's close. Sensex also ending the day lower by about 194 points. I just want to quickly look at the point contributions, and then we move on to the broader market space. But on the index, what's gained and what's lost, you've got BPCL, which has added about 7%. Remember, not a heavyweight stock, but just the sheer momentum in the stock, about 7 odd points that it's added. Reliance Industry another 5 points, but nothing compared to some of the losses that some of these banks have contributed. So 27 points on HDFC Bank and about 11 by Kotak Mahindra Bank.
Well, markets could be closing off the day's low, rather the opening lows, but volatility continues to be on the higher side after surging 6 to 7% on Tuesday. India VIX closing at elevated levels of about 17.7. And lastly, let's also take a look at participation, how that panned out in today's trade, considering today's the day for the weekly options expiry. Definitely your NSE F&O turnover appears to be on the higher side, closer to 28 lakh crore, while the NSE cash, I think it's now coming back to its average levels of about 33,
slightly lower,
34,
actually lower than even Tuesday. Tuesday was closer to 40,000. It's about 34,700 this afternoon. But quick closing comments from both our technical experts. Rahul, Mohindar, start off with you. Come tomorrow, we're closing out the truncated week. What are the cues that we need to watch out for?
I think on the downside, the worry area is clearly the Bank Nifty. You know, breaking 28,000 is not going to be technically very good. Besides, psychologically, I think a lot depends on the fact that we can hold those levels. So that's what I'm watching for on the downside. The Nifty still has good supports, 11,100 to 200, as I was mentioning before. That's a belt. But I think, if I segregate the banks and just look at the Nifty per se, I think there's enough that can help it follow through. A Reliance, an ITC, these names are really helping the index stay strong. I still have a feeling that we are largely going to be range bound over the next week or two and not break towards the downward side. I know we're scraping it on the Bank Nifty, but I think that's the one I'd like to watch. That 28,000 level is going to be key.
Aditya, what about you?
So come on Nifty first. I believe again 11,250 to about 11,200 levels should hold on the downside. probably a consolidation is going on, as Rahul also pointed out. Once that consolidation is over, my sense is we'll test again 11,500 on the upside and then gradually hit to levels of 11,700. Bank Nifty, strong supports around 28,250 to about 28,200. These levels should hold. Consolidation around these levels can take place. So the momentum today has shifted from HDFC Bank, Kotak Mahindra Bank. They were the laggards in trade today, which led to this correction. Once they consolidate and bottom out, probably we'll see Bank Nifty again inch levels of 29,500 gradually up. I'm not too bearish following these 2 or 3 days of correction. Probably it's more of a consolidation corrective move following those 2 days, Friday and Monday's massive move. Once those moves are firmly in place, the correction and the consolidation, we should head higher.
Okay, gentlemen, we'll leave it at that. Thanks much for taking the time out and being with us today, Rahul as well as Aditya. Really appreciate your time. Before we wrap up this leg of countdown, some more news. There could be some good news for debt-laden real estate lender Altico Capital as it looks to raise funds. Vishwanath joins us with more details. Vishi, what are you learning?
Right, Neeraj. So what we understand from our sources is that Apollo Global Management, which is a US-based private equity firm, is looking to invest into Altico Capital. At this point in time, they have made presentations to the lenders of Altico Capital, led by State Bank of India, and discussions at this point in time are still preliminary in nature. However, the idea is that Altico Capital will purchase some equity stake in the company and thereby help the lenders resolve the stress in the company. Remember that Altico Capital owes about 4,300 crore or more than that to the lenders involved in the case, and the lenders include banks as well as mutual funds who have some exposure to the company. Altico Capital, if you remember, last month they had made a default on about 20 crore about the repayment to Mashik Bank on external commercial borrowings, after which the company went into a deep spiral of financial stress. Lenders since then have been trying to find a resolution plan to help the company come out of this mess. The company has appointed Alvarez Marcel as advisors for the resolution process, while the banks on their end are appointing Ernst & Young, is what we understand.
All right, Vishy, thanks very much for that. So that's some bit of good news for Altico that defaulted just a few weeks ago and came into the limelight for all the wrong reasons. But with that, it's a wrap on this edition of Countdown from Navneet, Neeraj, myself, and the entire team that's put this show together. Thank you so much for watching.